Good evening, everybody, and welcome back. It's been another interesting month since we last met, to say the least. But I think we've got some big central bank meetings coming up. We've got the situation with the ECB. There's a lot going on with the central banks, but I think also I think there's a lot of questions that the markets are asking themselves about where we go from here as we move towards the end of this hiking cycle, potentially. But what I want to do at the moment is just focus right now on the current situation for EU markets. It's been a tough end of the summer. Euro and some of the euro crosses have been underperforming. You can see here on the chart, bottom left, this downtrend that's definitely in place for the euro against the dollar. We've seen the euro Swiss as well. Some of the euro crosses also following this downtrend. A series of lower lows, lower highs, confirming the sort of downtrend is in place. And we got the euro down almost 5% since July, which is quite a clear trend. Euro Swiss down nearly 3% since June, middle of June. Some safe haven demand from the Swiss, but also the central bank wanted to keep Swiss strength in place, which is counter to what they've done in the past. But is that coming to an end? Maybe something on that another time. But both now sit on these key support levels. So the euro around this 106.35 to 107 area, quite an important area with such a big meeting coming up just tomorrow. Could we start seeing both crosses and the euro against the dollar pushing down again if they're dovish? It's a close call for tomorrow, but I think what we need to do is look at the economy as well. What are the feeders into this meeting going forward? So what's going on with the euro at the moment? And why, really, is what we need to ask. So what's going on in the Eurozone? To be honest, the economies are not looking particularly good at all, particularly Germany, which is, let's face it, the core, the engine of growth, if you like, for the EU zone. So recent weakness in the economic data from the last 6 weeks has been actually quite dramatic and quite a shock. If we look at the Eurozone composite PMI output index on the left here, anything below 50 shows it in contraction. We're looking at 47. This is very weak data. This is very weak. 33-month low for the composite. Services at a 30-month low. And manufacturing, well, it's been down here forever, but at 43.7 is recessionary. There's no two ways about it. So this previously strong service activity is starting to follow manufacturing PMIs lower. This is not good news, because the crutch that the services were for the EU economy is being eroded and kicked away. So Euro sterling, EU GDP growth has been revised lower just last week. This was a second look, so revised lower from a low one before. So as you can see here on the right, 0.1%. I mean, basically we're flat. I think there is a danger here that growth remains fairly sluggish for some time. Exports have collapsed. Global demand is not boosting the economy at all. With a close association to China, the weakness in the Chinese economy is certainly not helping the EU economy at all. Is that about to change? It doesn't look like it at the moment. So therefore, this throws up so many questions for the ECB. But the euro dollar weakness seems, I mean, as we've seen the euro fall, it seems that it's justified. It really does. So this time comes when we've got the US economy looking like it's the cleanest dirty shirt in the laundry, if you like, or basically head and shoulders stronger than everything else that around us. And so we've seen this dollar strength recently. So the US economy showing some US exceptionalism, resilience, whatever you want to call it. But if we look at US ISM services against European, last week they hit a 6-month high at 54.5. Impressive data. So, we've got concerns now with core inflation holding so well or so elevated in the EU, with growth falling so quickly. We have to ask the question about stagflation. This is higher inflation and lower growth. And this is not something that is easy for central banks to deal with. Do they raise rates to kill inflation, or do they, which could kill the economy? Or do they leave rates where they are to help the economy, but see inflation start to rise again? And with oil prices and energy prices starting to rise again, It's going to be a very close call, but it's not an easy job. I think the ECB could be more clever, more lucky than clever if they get this right. So a policy mistake is possible. What are the implications of that for the euro? Well, at the moment, we're seeing a bit of a bounce, but I think into such an important meeting, this is just a bit of book squaring. So I think we are going to get some moves over the next 24 hours. Markets are banking on a September pause, but I don't know. It's a close call. Elsewhere, however, other economies have also been struggling. So the euro crosses haven't really moved a great deal. It's mainly been a dollar move. So we've seen dollar strength, euro weakness, sterling weakness, Aussie weakness, Swiss weakness. So euro sterling hasn't really moved a great deal. If you look at this chart, bottom left here at 85, 88, 90 level, we're kind of mid-range, to be honest. So nothing major there. And we had further weak data from the UK today, which really didn't move euro sterling a great deal. I was quite surprised with that. Euro Aussie, that looked like it was starting to break down. But the Aussie then started to falter as well. But looking at commodity price and the rest of it, maybe we get some outperformance of the Australian dollar against the euro going forwards if these commodity markets hold up. But I think we've got potentially increased volatility coming up, particularly tomorrow, and possibly into the end of the week as well. And this ECB meeting, I think, is going to be rather critical going forwards, because this is going to set the tone for this for the euro for a while, I think. And it's a very close call. I think the problem is here with stagflation is that both the arguments for the hawks and the doves are valid. And so the interest rate decision tomorrow at 1:15 London time. We then get the Lagarde press conference, which I think is going to be vital. What's coming next is what we're going to get from her, hopefully in some form, comes at 1:45 London time. And I think what she is going to come out with there is going to be vital to the markets. And I think we may get more from that. The market is split on the hike. So the announcement will see some volatility as well. And there'll be a short statement with that. And then I think the bigger move may even come when Lagarde starts speaking. Is she still as hawkish as she was? Has she shifted her tone? If they're skipping this meeting, are they going to keep a hawkish stance just in case? I think they have to, with core inflation where it is. But it's key to find out whether they now are still focusing on inflation solely, or whether this growth problem has become a big enough problem for them to pick it up and talk about potentially stagflation. And how I want someone to ask her how they're going to deal with this. So as you can see from the euro chart here, since January the 1st, we had that move up as the dollar fell, and then dollar strength, euro weakness, pushing in down to these sort of longer term lows. These are important levels that we need to keep an eye on. And there is certainly a meeting tomorrow that is big enough and important enough to possibly put pressure on those levels as well, or see them form as something of a continuing base. So that's it for me for this. I'll be back a little later on a different subject with the central banks in mind. But until then, I hope you've enjoyed this. It's been a tough 4 weeks. I think it's going to be a very interesting 4 weeks ahead.